International markets appear to be rebounding after Monday's concerning global sell-off. The Dow climbed to start the day after a rough start to the week. In Tokyo, the Nikkei index jumped by more than 10%, marking its best single day since October of 2008. The index plunged more than 12% on Monday, you'll recall. That's the biggest one-day dip the Nikkei had seen since 1987. Well, CBS News senior business and technology correspondent Jo Ling Kent is luckily here in Studio 57 to make sense of the madness. So what are we to take? I mean, is today obviously faring much better than yesterday?
Yeah, it's good news and we'll take it, right? But what we're basically seeing is a market recovery. The markets globally, especially here in the U.S., are digesting what's happening in terms of that weak jobs report that we saw on a summer Friday. And so as a result of that, basically the disappointing jobs report that we saw, we're looking ahead now, and markets are kind of pricing in what's to come. And what we've seen is the Federal Reserve, those who watch the Federal Reserve, the market watchers, are now pricing in possibly a half-point interest rate cut come that mid-September meeting. And that is important because it affects who can get into the housing market, credit card debt, and how much that will cost you in addition to car loans, things like that.
I mean, yesterday, so many analysts were saying, just put your computer away, go for a walk. I mean, obviously, if you're about to retire or cash out your 529, hopefully you're not aggressive, in an aggressive portfolio. You're in something safer. But for a lot of people, what happened yesterday, I mean, doesn't really resonate with them.
Yeah, we're seeing a nice recovery. We love to see something come back in that quick of a way, a nice little turnaround. But we're also seeing that, we can't ignore why it all happened on Friday and Monday, right? So in addition to the disappointing jobs report, we're seeing earnings reports from big companies like Starbucks and McDonald's and Whirlpool kind of showing that consumer spending is slowing down a little bit. And a lot of us have already felt it through the vibe session with inflation that's persistently sticky and stubborn and high. That's why the Federal Reserve has kept interest rates as high as they've kept them. They didn't cut them last week when we were down at the Fed covering this. And so looking at the broader picture, it's important to note what the fundamentals are in terms of, are we seeing consumers pull back on spending? Are interest rates going to come down? But overall, if you're in the market, you want to just stay put your phone, your stock app away, and just ride this out. Because typically, if you look back at the last 12 months, Lindsay, all three major indices are up at least 9%. So you've still made money if you're in the stock market. You've still made money if you have a savings account. That's really what's important here.
You've mentioned the Fed a few times, so obviously we're watching to see what happens come September. Likely, we're not going to hear them cut rates before then, because then that kind of shows panic, right?
It does. And look, what we saw yesterday and then today indicates that it is very unlikely historically that the Fed would call an emergency meeting over something like this. Like, let's be real, right? But you can see there has already been discussion. Fed Chair Powell said there was discussion about whether rates should have been cut last week. We learned that at the press conference. But ultimately, they decided to keep things steady because they want to bring inflation down. They wanted to continue watching the labor market. So now, instead of just a quarter-point rate cut that's being priced into the market, maybe say last week, now we're looking at maybe we'll see a half-point rate cut, which would be really helpful to people who are trying to get in to the housing market.
Real quick before we let you go, with the Fed making that decision in September, who would that benefit and who would that help? Because it wouldn't bring mortgage rates down immediately, but a lot of people aren't invested in the stock market.
Yeah, it's funny. Mortgage rates are kind of already floating down a little bit. They're at their lowest point since February, so that's good news. But certainly it will help a lot of people who are looking to get a new mortgage. If you want to get a mortgage, it's a little bit more affordable and maybe get a little bit more bang for your buck. It will help credit card rates and auto loans. All of those things will be really helpful. But what you're also going to see, and mark my words, you already have Republicans, including former President Trump, on the campaign trail saying that this would be a politically motivated rate cut. I asked Fed Chair Powell about that. He said, and they have all said, they do not account for politics when it comes to making policy like this and making these decisions. So it's going to be juicy and it'll be fun to watch, but certainly you can look forward to something of a rate cut come September.
Juicy being the technical term. Jo Ling Kent.
Always.
Thank you.